Hello and welcome to the latest edition of Wescott's Webinar series. I am Mark McCarron, Wescott's Chief Investment Officer. And in today's session, we're just going to talk a little bit about the market, a quick update on what's going on through April 24th, but also focus a little bit on our sustainable investing framework. Particularly as markets become more volatile and less uncertain, sustainability becomes even more important. And finally, we'll talk a little bit about our outlook going forward. So first, a quick update on the markets. The good news is that the U.S. Congress just last night passed a second stimulus bill, this one at $484 billion, and really to focus on helping small businesses again, which are taking the brunt of the shutdown, of the impact of the shutdown, and hospitals. There's also specific funding for COVID-19 testing, which we think is very important going forward. We'll address that later. The other piece of news that we wanted to highlight is that there has been quite a lot of volatility in the oil sector. This is due to the fact that falling demand as a result of the lockdown globally have driven oil prices to record lows. In fact, if many of you saw the headlines, there's futures contracts that are traded on the oil price, and every month it rolls over to a new contract. But the May contract, which is the most recent one, actually turned negative, which has never happened before. And it just really does highlight the uncertainty with respect to economic growth, the demand for energy, and the impact, obviously, on oil prices. We'll talk a little bit about that impact going forward, but how critical it is to understand oil supply, demand, and investing in such a volatile environment. But despite the oil price volatility, stock markets in aggregate have remained quite stable in April, and in fact have been up in positive territory so far this month. Finally, what's driving the stock market stability? First and foremost, it's been the technology and the healthcare sector. They have been the market leaders. And as you can imagine, the energy sector remains weak, not only because of the oil price volatility, but just the outlook on economic growth going forward. So with that as a background, we wanted to talk a little bit about Wescott's investment solutions in general. As we know, we've been talking about different components of our investment solution over the last several weeks in these webinar series. But today we want to focus on Wescott's ESG plus impact framework. And we're doing that this week because of the volatility in the energy sector, but also April 22nd was Earth Day, and it's the 50th anniversary of Earth Day. And it really does focus the mind on the investment solution that Wescott's developed over the last several years as an extension, really, of effectively meeting and achieving client goals, which is Wescott's mission. So a little bit of definition here. First, ESG refers to environmental, social, and governance factors. These are things that investors look at to determine what the opportunities are in certain companies and sectors, and what potentially the risks are in those same companies and sectors. And it does, at the margin, determine what's attractive investment and may not be as attractive investment. And today, there's a lot of information now available at the company level on these environmental, social, and governance factors. And we, along with the managers we use, now consider ESG risk when making these investment decisions. So just an example, on the right-hand side, we've highlighted environmental as things focusing on climate change, perhaps an investment in an effort to improve or support those companies that are focusing on the effects of climate change. That could be limiting carbon emissions in your investment portfolio and focusing on energy efficiency. There's another segment of investment on the social side, whether it be human rights, labor standards, weapons. Those are other areas of focus that clients can choose to emphasize or de-emphasize, of course, in terms of their goals. And then finally, investing from a governance standpoint, whether it be gender diversity issues, board composition issues, and shareholder rights. All of these factors are brought together by managers to determine what investments to focus on and which ones to de-emphasize. I think it's important to bring this up, particularly when we are in a situation in the current environment, because things like this could in fact affect performance of portfolios going forward. So just a little bit of a background and a reminder. Wescott's ESG plus impact approach has been around for quite a long time, but there's been an important evolution of that solution in 2018. We developed it as a distinct offering. And the managers you see on the right-hand side of this chart are all the managers that the Wescott Investment Research Group has selected through our due diligence process based on their return opportunities that they can achieve for our clients, the risk strategies that they employ to manage the portfolio risk, but also based on their ability to capture a certain theme or in fact affect a screening out of certain sectors and stocks that fail to meet client objectives. And that's really important because a component of this is Parametric US and Parametric International. Our partnership with Parametric started 2 years ago, and they allow our clients an ability to customize some of the investment screens that they put on in the US equity and the non-US equity components. It's really important that we talk through this today because the dynamics in the market are affecting all investment strategies, but how do you build a portfolio that's sustainable today and sustainable in the future has become not only a focus of current clients, but a growing demand in the market in general. The final comment we would say is that this strategy was built over the last 2 years. It's balanced portfolio, 60% equity investments, 40% bond investments. And we're also able to offer this solution in an ETF implementation as well. But really, what is it? How does it relate to today? So as I mentioned before, the market volatility has been quite significant. And in particular, the areas of the market that have been the most volatile have revolved around the energy sector and the oil price, as talked about before. In a portfolio that we've built, particularly within the equity component, what we're showing here is how the equity strategy that we've created in the ESG plus impact strategy is allocated relative to its benchmark. And we're highlighting this today because the strategy naturally de-emphasizes the energy sector. And that's because not only is it globally diversified and market-oriented, but intentionally we're building a portfolio through the selection of our managers and the allocation we come up with to target a lower fossil fuel exposure than the benchmark, a lower carbon risk score than the benchmark, which is effectively how much of an impact carbon emissions are making on the environment. And in general, we're looking to lower the risks associated with environmental, social, and governance issues relative to those companies in the market in general, in the benchmark. And so while you can see the underweight to the energy sector is a natural fallout of this, the focus on technology and in healthcare, I'm going to highlight those two, because those are the areas that are holding up best this year, whereas the energy sector is the one under pressure this year. And as a result, the portfolio has, through its sustainable focus, has held up quite nicely in this environment. And not only that, but we think going forward, it's a nice complement to the core portfolio and a good strategy to consider going forward. So with that, we just wanted to really finish up in terms of where we stand today, the market environment remains uncertain. The economic situation remains uncertain. But very importantly, the strong policy response that we saw even evidenced yesterday by the additional fiscal stimulus bill is really designed to support the economy in this time of uncertainty. It has brought equity market volatility down, but still risks remain, and also the volatility in the market is here to stay. Corporate bond market, we've seen stabilize from a few weeks back. That has a lot to do with what the Federal Reserve has been doing. But we see that there's still quite a lot of demand for safe assets like U.S. Treasury. So both of these things, the equity market volatility decline and the bond market stability, have supported Wescott strategies, both our sustainable investment strategies and the ESG plus impact we just talked about, and in our core solution. And in both cases, success in recovery depends quite heavily on the focus, which now is on expanding testing and researching potential vaccines for COVID-19. These are the issues that we see in the market. They're impacting every investment strategy. We wanted to highlight today the sustainable investing solutions that Wescott's built over the last 2 years and how they're positioned and how they're weathering this current environment. As always, we thank you for your interest. We thank you for your trust and confidence in us. And as we work through the coming weeks and months, please do not hesitate to reach out to me or your advisor with any questions. Thank you.